Macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. Well, the record-breaking stock surge of October was led by one standout sector. Here to fill us in on that is Kevin Cook, our tactical trader. Now, things are not always what they seem.
No, they're not.
I will be the first one to admit to that. We're going to try and find out from you why energy was the top performer, but I read your article on Zacks.com on Monday on this, and you're saying that it just wasn't that crude oil went up $20 or that recession fears have been pushed to the side. So please break it down for
And
us.
those were big factors. I don't want to discount those. You know, crude made a nice bottom at $75. Did not make new lows really during this whole summer recession crisis that we've had, and then just went higher. And recession fears were coming off the table early. We didn't need we didn't need the third quarter GDP report to tell us. The market was kind of speaking that recession fears were fading. All right, so let's look at the performance. Now, this is a snapshot from, these are the select sector spiders, right, the 9 major sectors. And Zacks looks at 16 major sectors of the market, but the S&P breaks it down into these 9. And this is just a snapshot for the last month. So this shows you energy, obviously clobbering the rest of the market with a 17.6 performance. But that's just for the 30 days from roughly end of the first week of October to about yesterday, October 7th.
Okay.
So that's the way that shapes up. And you can see even materials did really well, and financials, of course, but you beat the financials down, they bounce back, right?
So I know that the holdings and weightings of these sector ETFs can sometimes make a difference. Give us an idea of what's in this one.
Yeah, big difference, right? The top 5 holdings in the XLE comprise 50% of it. And you can imagine it's Exxon, about 17.5%. Chevron is 15% of the XLE. You got Schlumberger up there, ConocoPhillips and Oxy. So those 5 together make up 50% of this. So they tend to move it. But if we drill down, we can see some other names in here too.
So help us understand this better. Give us a couple of specific examples of how these stocks powered the sector higher.
I will. I'm going to give you some stocks that I trade and that just did phenomenally well. I'm talking like 50% gainers. I want to take a real quick look at the chart of the XLE just to show you the dramatic move here. We're talking, look at the beginning of October. This thing plummeted down to $54, and then you see the surge all the way up to 73 in a matter of 3.5 weeks. So the earlier graph I showed you, looking at a month of the sector, showed the XLE with a gain of 17%. This from 54 to 73 is actually 35%. When you look at the extreme high lows of it, right? And materials did almost as well with like a 25% gain. Financials had about a 27% gain. So you wanted to know
specifics.
Besides Exxon, besides Chevron, some of the smaller names. And these are actually, if you look at Baker Hughes, National Oilwell Varco, and Cabot, those are all like 9, 10, and 11 on the list, all about 2% weighting in the XLE, and they're just below, say, a Halliburton or an Anadarko or an Apache. But now you've seen like the 12 top holdings. Look at these moves in these guys here. Here's what I'm saying. It wasn't just that oil rebounded or that recession fears were off the table. It's that these stocks got hammered. I said they got taken to the woodshed, baby thrown out with the bathwater. These stocks were just slaughtered. Baker Hughes down to 42, National Oilwell Varco down to 48, Cabot down to 55, EOG down to 67. So and why? Because of panic, and the stop losses are down there. At times like that, I say that the stop losses are palpable, and the market makers and the institutions know they're there, and they just crush the market, take everybody's stops out, and then they just scoop the bargains. And so that's why you see these 40 to 60% gainers in these names inside of 1 month. And they haven't faded much. In fact, Cabot and EOG have gone beyond these highs. So it's just an amazing run. And that's why on panic sell-offs, if you have a shopping list, you want to have your limit orders in there like on a dream. Like, yeah, I'd love to buy it down there at $50, and you put your order in, and you'd be surprised how many times you get filled on those panic days.
All right.
Because extreme fear creates extreme opportunities.
We appreciate all of the help in trying to understand this market than we can get, and we're getting it from our tactical trader, Kevin Cook. You can follow his columns on Zacks.com, and they change frequently, so you'll want to check back often. You can also follow him on Twitter at Kevin B. Cook. With Kevin, I'm Terry Ruffalo.